So obviously online insurance giving you guys an advantage here amid this pandemic, the political unrest that we see here in Hong Kong. You've been in business for about a year now. Tell us a bit more about the feedback that you're getting from clients on health insurance overall and the outlook moving forward.
Yeah, thanks for having me, Yvonne. So Bowtie is Hong Kong's first virtual insurer. We've actually seen a lot of demand, as you mentioned, in the 2020 first quarter. We're a big believer in transparency. So what we've done is we've put out a lot of information about the COVID-19, about where to get protection gear, about where to get hand sanitizers, what to do if you get sick, what to do if you have symptoms. That's actually brought on 10 times more web traffic for Bowtie, and then we've seen a 3 times increase in sales from there. I think the outlook is very, very positive. Through the sustained period of process, I think people are much more used to looking for information online. People are much more used to understanding how health insurance works. It is a fairly complicated product. But really, through this extended period where people are using information, they're sharing information, our articles are actually being shared across WhatsApp groups in Hong Kong, which has led to that huge increase in traffic.
You're still relatively small in the industry, Michael. You don't exactly have a big tech company shareholder. You don't have that traditional book of business. So how do you scale up enough to sustain the business?
Yeah, that's a really good question. We've actually seen very, very healthy month-over-month growth. So we're really treating ourselves as, maybe it's an oxymoron, but a startup insurance company. We literally started with 0 policyholders, and month-over-month we've been adding people. So we've had a very healthy growth through the past 12 months. We see continued healthy growth. Even in the current month, even though there's increased social protest, social tension, I don't see that slowing down. Really, I think health insurance, especially online health insurance, is less than 0.1% of the market. Logically, there's really no reason why it shouldn't be much more. The product is quite standardized by the government. It provides a tax deduction. Bowtie's health insurance product is actually the lowest cost product for a standardized plan across male and female ages 0 to 75. So we just see we have a fundamental advantage on the cost. Our user experience is great. People can complete the entire process online, including the underwriting in, for example, about 10 minutes. So that we think we really provide a superior user experience, a better cost product, and just seeing healthy growth. So we're sort of taking this one step at a time. We realize online insurance is going to take a bit of time to grow. But really, with this kind of growth that we're seeing, I'm pretty confident on our future.
Michael, what are you doing in terms of adding products to your portfolio of offerings? Is that something you're looking at doing to grow the business?
Yeah, absolutely. Product momentum is really important to our business growth. We keep launching products around our flagship health insurance product. We think our flagship health insurance product is actually very important. So we stay very focused on health insurance. I really believe it's the first insurance product that people should buy. And the fact that the government's providing a tax deduction really makes it a no-brainer. Beyond that, we're really supplementing that with gaps that we can perceive of where if bad things happen to people, that core health insurance product may not be enough. One big area that we're focusing on lately is really on the outpatient side. So I think health insurance companies have an obligation or have the financial incentive even to keep our policyholders healthy. So how do we keep investing in the preventative care wellness? How do we do more of the outpatient clinic care that is traditionally very hard to insure? So we put in some more innovative products on that end, and we'll continue to explore that angle for 2020.
Michael, you've obviously got first mover advantage in terms of this digital license, but we know that some of the incumbents, many of the incumbents are investing heavily in digital. How do you ensure that you kind of fend off their approaches? Because they have massive financial firepower. They're going to be coming after your market share pretty quickly, aren't they?
Yeah, and there's really no secret. I think it's all about executing fast and staying focused. I think we started from a digital native. We carry no legacy system, so one thing we were pretty insistent upon is we actually built all our internal technology systems in-house from day one. So we own the systems, we understand our own systems, we can very easily extend our systems to new use cases, and it's really just about staying agile in the market. I think traditional insurers are really good at doing what they're traditionally good at doing, but it is actually quite difficult for them to change and adopt that technology mindset, and there'll be a lot of internal resistance.
So, Michael, does the mainland offer an opportunity for you? Is that an area you could push into?
Yeah, that's a really good question. I think we keep an open mind about that. Probably the biggest question there is that we need a bit more regulatory certainty around how the Greater Bay Area is going to work, how the insurance products and how the insurance servicing regulations will pan out. From our mind, we remain very focused on servicing the Hong Kong market. Right now in Hong Kong, there's probably 200 to 300 million people that are still uninsured for health insurance. A lot of people still get their health insurance from their group employers, and we've seen that doesn't really work out very well in a recession type scenario. So we're very focused on just developing our own base here in Hong Kong, getting our product, getting our technology ready first.
And Michael, I mean, obviously the big sell now is the convenience of this, the speed, and how you can get a product. Once that's all commoditized, though, what happens next for insurance tech?
I think that's the question on everyone's mind. That's a really good question, Yvonne. In our mind, as you commoditize a product, and that is in a way what our voluntary health insurance plan is. It really is a standardized product. It is quite a commodity. In the commoditized market, I believe the lowest cost provider will have an advantage, and we're very focused on automating our processes, running everything through our technology, and building it all in-house so that it actually fits our use case. So I'm actually a firm believer that even if the market does become quite commoditized and everyone does deliver a good UX, everyone delivers a good product, we will still have an advantage. But beyond that, I really think as a health insurer, our second differentiation is whether or not we can release very interesting health propositions for our customers. So beyond the health insurance, what value-added services can we have? I believe insurance companies, especially health insurers, are really the payer into the healthcare system. We drive a lot of how incentives are structured. We drive a lot of how much preventative care can be invested in and how it is actually provided to our policyholders. So I think we have another additional advantage in that we have a direct relationship because we're an online direct insurer. It's very, very easy for us to deploy new digital health solutions to our policyholders compared to traditional insurers. So I'm really hoping that as we bring on more digital health solutions, that will provide more differentiation for us.